Greetings, market rebels. Welcome to this week's sector situation. It is Sunday, May 29th, 2023. It's a little bit in front of 11:30 a.m. on the East Coast. It is Memorial Day, and so a special and sincere thanks to all those vets, past and present, for their sacrifices. Let's get into our trusty disclaimer and our trusty intellectual property rights notice. And we'll flash that for another moment. And then I'm just going to leave this up briefly. This is what I covered in the macro measure. So just to kind of give you an idea, if you want to take a screenshot, a lot of those comments may come out in some way here in sector situation, things related to that, but that'll just give you an idea in case you didn't catch that video. Let's see, let me just kind of stop the share here and reposition things so that we can get going with, we'll start out with our grid of 12 sectors, and then we'll go from there, mainly almost exclusively just charts and discussion. But once again, we're looking at the narrow market, and we've talked about this for a while now. It's been very concentrated in tech, really with a little bit of help from XLC, which is not too far from the high. And mainly, right, the SMH has been the big area, as it often is, but maybe not to the extent that it is right now. And we already switched over to percentages. So let's see if I can get that fixed. So this is extraordinary. You know, if you're looking at sectors and you want to talk about semis, you've got the AVGO earnings, which I think a lot of the NVIDIA euphoria has been priced into there in sympathy already, but you never know. Maybe, just maybe. I think this is very, very extended, however, but they do have the earnings due out midweek, right? But right now, you are checking in rounded at 89 RSI on the 4-hour chart, which is no slouch itself. So going back over to SMH, I think this is just very overdone. And I was talking about this, of course, in macro measure, but I think Ryan talked about it. Maybe we talked about it a little bit in Friday's, one of Friday's webinars, but regardless, this is at about 85 on your 2-hour in terms of RSI. So I think if they do pop this market on the so-called debt ceiling deal that's done in principle, and you get further popping here, you can never rule out even more, but it would be, I think, a very low probability in most cases that I've ever seen relative to those for this thing just to continue to go without some kind of pullback in some way, or pause at the very least. So if you are riding longs in things, I can't tell anyone what to do. I would never presume to do that anyway. But personally, I would liquidate longs first on a big gap if there is one. Don't know if there will be. Again, a lot of that could be priced in already as well. I would just do that, capture my profits, and then worry about getting back in however I deemed appropriate after reviewing things and having a moment to think, because I feel like you'll be in such an extreme overbought state at that point in SMH, especially individual issues in there. It'll be just one of the more absurd types of readings you're likely to see in most cases. So that's just kind of a side note, but hard to argue, right, overall with the trend, you know, and this is why we have been kind of I guess you could call us economic bears that are still very skeptical, but we've been willing to go with the trend ever since we saw the bottom. Really in October, we started to get, okay, well, they're breaking it out of this channel. Okay, there's a higher low that got put in. All right, now they're making higher highs versus this high. Let's see what can happen, and then just kind of go with it, right? So we were back in here somewhere. I can't remember the exact date where we were like, all right, well, we're just going to go with this and trade it. And so we fortunately, right, that's what we tried to do, and that's fortunately what we did do in this case. And that led to this whole thing here, which we kind of sniffed out a little bit a couple of weeks ago and said, hey, what could these guys use to really justify the next kind of burst higher, if there is to be one? maybe it's the NVIDIA, the AI, and they went right ahead and did that. But again, now you're just at an extreme, and it could become more extreme. Like I said, at that point, I'd be done. I mean, I feel like Avgo right now, this Broadcom, these readings are again. If I flash you the RSI on the daily, it's at 86 on one of my measures. It's at 86 down here. On this one, it's at 87 already. So someone was asking, can we get another massive burst? Maybe. Yeah. I mean, I would not rule anything out. Who knows what kind of story or tune will be sung on that conference call by management. They might go so far as to say they're naming their children, after AI or something. Who knows at this point? But the euphoria, it's all there. You don't really rise too much. I mean, I don't know what slope this is, but if it's kind of getting towards 90. That's all I know. So, we know that you really can't go greater than 90. So, you don't stay going near 90 for very long typically. So that's just my warnings there in terms of, because this was sort of requested, right? So I'm just kind of following up, and it is pertinent to, right, our overall market discussion. So I think the leading sector in other words, the leading sector is really getting close to overdone, is already overdone, needs a pause or a pullback, probably desperately. So that's something to keep in mind since we're talking about sectors here and what have been the leaders. Going back to our group of 12 that we check in with and usually start with week in, week out, you can look at them all and they're not all that impressive, right? So here's your energy, right? That didn't really have a great week. Here's your financials, and I'll blow that up a little bit more. That didn't really have a great week. I will note, though, that a lot of things that got smoked during the week, again, kind of like, this is where I'm kind of at odds with a lot of these, I would call them perma bulls, that are trying to act as though this rally has been, broad enough to be acceptable. In their book, maybe it is, but I mean, I don't think you can deceive people. You should deceive people and say, yeah, there's been a lot of stocks accompanying this. It's mainly been AI. I mean, it's been anything related to AI commentary. A lot of things are getting left behind. My book, people that watch this week in, week out know, and again, this is just from my career and probably things I read, at the start of my career about technical analysis, and which was hard to come by way back when. But anyway, energy, financials, these are not really humming along. XTN, which took a little bit of a turn for the better by the end of the week, but that's not breaking out. So these are three areas where, I would think, right, if the world economy, the US economy were starting to roar again, these things would be doing better, but they're not. And you could say, well, they've all got their own specific issues, and they do, but that's always the case, right? That's always the case. So these are not doing well. I kind of look at that as like the blood running through the economy. A lot of people do it that way. It's not my own unique creation. A lot of people have described it sort of like that. And so, yeah, I just don't see that as something wonderful right now. It's probably a little bit of a good sign, though, that Staples got sold into. They look like they closed this gap from way back when, proving that when you're up here, it seems hard to believe that a gap like this will be closed anytime soon. But then that was the start of the month, and that gap got closed pretty soon, right, relative to in the grand scheme. But discretionary did pop, right? So that's a little bit of a good sign. I'm a little kind of, I guess, skeptical about this whole thing personally, but you can't deny that they managed to they kind of put this breakdown together below that support line, resistance line that we had there, depending on if you're a bull or bear, where it was when we discussed it. But they brought it back above there, right? So maybe there's something there. That could be just the components. I think it's more just components and everything kind of getting caught up in this sort of frenzy on Friday, where you can see, look at all the sectors that had mostly a green candle. There's a lot of sectors that managed to have a pretty poor week, but somehow they managed to put a green candle together on Friday. So, but if you look at this, right, how do you like that, right? How do you like your basic materials? These things are all in downtrends in the short term to intermediate term. The good thing about this, though, would be that some people are going to kind of call this a falling wedge. And there's a lot of falling wedges out there right now that I came across. And that's potentially good because that's really considered a more of a bullish pattern if you've had an incoming bullish sort of impulsive move up, and then you get but these retracements are from where we ran to are pretty steep. So again, as a bull, you don't want to see steep retracements. You want to see that the demand is so strong that you don't see much in the way of a retracement. You don't get far beyond, let's say, a 38.2 or at the worst 50. When you start getting heavier retracements, right, it sort of tells you that, well, that trend really didn't sustain, right? That initial thing that I saw that looked like it was about to start changing to something even stronger potentially, that didn't materialize. So I think you can write home a little bit about this skeptically. Discretionary transports, still hasn't broken out, but at least they didn't get walloped. XLU, we cover it to cover it, but XLU doesn't look like this doesn't look to me positive, right? And that's, to me, this has a lot to do with what's been happening with the 10-year, if you want to say it that way. The yields, basically, like yields have been rising and this thing's been falling, and that's fairly standard stuff right there. But a lot of these areas like XLK and XLC, these have done most of the work that they could. They might still be able to help out a little bit more, but I would say what I would tell folks that are looking at sectors this week is try to see, right, what, if anything, can start to find a bid and start to move up. Because to really keep this, let's call it a mirage for now, but to keep this mirage intact, they really have to start broadening out and getting more things to work, because you can't take Avgo and Nvidia up like every day at an 87-degree positive slope. So you've got to be able to do other things now. Maybe that means they'll just go back to other big names like the Apples and Microsofts and so on of the world and start goosing them again. Could be, but if you're a bull, you really want to see this participation fan out to really suggest that, yeah, this is the dawn potentially of a new bull market. Something I'm still skeptical about personally, but we're just going to go with the charts, whatever the charts tell us. And right now, though, I would feel better if I were a bull if there was more participation. And while I was celebrating in semis euphorically because AI, we're not going to have the Terminator outcome. Somehow we're going to have a much better outcome. The AI thing has lifted the market this year, and it's tacked on what we just saw, and it's helped. There's a lot of other factors that have helped this jam job up. But certainly, right, a lot of areas just aren't flashing good things. Healthcare isn't, real estate is not, nothing really there yet completely in energy. So none of these other issues are really anywhere near overbought. XLU is near oversold, in fact, is oversold. XLV is oversold, but a lot of them are just kind of, well, XLP, I didn't even realize, I thought that was in the 40s. So that's last time I looked at it, it was, there you go. That's why it's good to note that's overdone too. But I would wait to see if you get more participation. And if you do, that could be, if you start to see an area really start to perk up, they could be fanning out into there. If the market stays buoyant, that might be an area that you go after, look inside that area, try to find some names that have the best technical profiles, the least amount of resistance in their way, that kind of thing. And then maybe that could deliver something. Certainly, if we see UOA that way, I'll be trying to factor that kind of scenario into my thought process if we do start to see things fan out. But as we've noted, right, XLRE is I think it's in trouble. At the very least, it's not looking wonderful. And really, IYR is not looking wonderful. IYR is not looking wonderful either. This is one that Ryan and I have had bearish positions on. Remember, these are not like super time sensitive. These are longer dated, and they're very low risk at the moment. The expectation from us is that when the time comes, we're going to morph these into something far more aggressively bearish than they currently are. But that had to save like other things did in terms of on Friday. But yeah, you don't really, I mean, I don't think there's anything great there. You're below all your SMAs. Most of them are down sloping at the very least. And the only positive I think you've got working for you there is that at least you're above the low. So maybe there's a chance for a higher low to be registered here if this thing can start working its way back up. And that would be at least some kind of an emerging good sign. But that just doesn't, to me, like that doesn't really look all that great. XHB, which has really defied gravity and defied a lot of other things lately, that too started breaking down. And you can see that, I think we talked about this. I can't remember if I had ideas on this or not that are current. I did have some on it, I think a little while ago. I don't know if they're still current, but you did have the Friday save there. So maybe there's something there, or maybe it comes up to the 20 there in light blue, doesn't get through, and then we do get a little corrective activity after the run we've had in the market, and this thing pulls back a little further, but still in an uptrend overall. I mean, you have to give it that. I'm guessing though that if we look at maybe here on that high, you're at 66, and on this high, you're at 76. So this is a little bit of kind of negative divergence where and there's been some double tops actually forming out there that are like this. So just keep your eye on that as well, because that could be negative divergence type of a trade there. Not something, that you want to see. I think divergence is worth noting when you see it there. And I think we just saw it there, that's in place. And I've seen that on other things. I just can't recall them all, like in just kind of cycling through ETFs, cycling through different stocks. I've seen a lot of double tops potentially in place right now. So let's take a look at KRE. That's also been a pretty big area, right? We all know why. That's been a big focus of late. Failed at the 50. I think we talked about if it could get through the 50, it couldn't. But right, they brought it down to just above the 20 there in blue, and they've held it. So the tail of the tape here is, can it take out the 50 and then that high, or right, will it slide back below the 20, and then we've got problems all over again? Sliding below and closing below the 20 would probably put it below all the SMAs, pretty much all of which would likely be downsloping at that point. So that's not a technical profile that screams buy, right? So that's kind of an area. So you could see that this regional banking thing still, it's not screaming back yet. You could see that the IYR, the real estate ETF is still not all that wonderful. There's a lot of problems out there. If you add that to the financials that we looked at, so XLF, XTN, XLE, all not firing in a big way, it kind of tells you, right, this is not this wonderful, there's nothing wonderful developing. And remember, the market is supposedly forward looking. So I'm guessing, right, if you're one of those people that says, well, the market's forward looking, well, then if it's forward looking and things are getting better, the way that semis are pricing things in, the way that a lot of people are talking about all this stuff, then how come other sectors aren't getting better? How come some of the most important sectors and vulnerable sectors are not really getting all that much better as of right now? That would be my question. If everything's really wonderful, then why are these other things not working out all that well? And kind of related to XHB, while we kind of are somewhat on that, would be kind of like, let's look at those ETFs, right? In terms of housing, this is a timber ETF. This had a rough week after trying to work its way back up towards the 200. Did kind of pull the rabbit out of the hat like so many things did on Friday. Maybe so. There's maybe more, kind of like a reversal candle there for sure. Maybe something develops, but still below all the SMAs as of right now. We look at the other one; it's probably very similar. We looked at these last week because I couldn't find anything with my normal just LB futures on that'll show up on Thinkorswim right now. But yeah, that's not a wonderful. This is a downtrend, right? So what's wonderful about this? So kind of filling that out, if we go over to oil and look at the oil future, this is not looking good, right? In terms of, I don't see anything wonderful here yet. We have had some paper that I've got in there as a bull bull trade ideas that are ready to go in UOA Pro. And got the percentages back, but and there's some good things happening there with, if you like SMA crossovers, they're not a big thing for me, but I know some people like them. But the 50 is your impediment, right? That's what you've got to do. The 50 and this high are basically the same thing. So I really wouldn't get too excited until we start to see this thing take out the 50, take out the 100. Then you can start feeling better. But the long terms are still downtrending. You might have, right, this low is kind of extreme. You might have a higher low in place. You might have a second higher low in place. You have a slightly higher high. Let's give it its due that there's some decent things happening there. But overall, the overall picture is still downtrending. So that would be nice to see that perk up. Again, that could be geopolitical. There's a lot, you all know that. There's a lot of things that are oil market specific too that factor in here, but just not roaring at all, right? If there's this great situation that awaits us, that this new bull market that's supposed to dawn, I just don't see, if we're supposed to be pricing that occurrence in, that's supposed to be happening 6 to 9 months out, as per the market being forward looking, as per the permabull crowd, you know, are these things just screaming buys even, or is the market mispricing these things right now? I just, which I guess is the same question, but you get the idea. I just don't see that right now. Another thing that we would look at, right, would be copper. And so looking at copper with what we have to work with here on Thinkorswim, here's copper. I mean, I'm not even going to worry about, we're not really trading this, but what are we supposed to love about this? Right. Look at this. This is not something that's indicative of, there's heavy demand for copper because all kinds of wonderful economic developments, financial and soon to be financial developments are developing around the globe. Just not good. Right. You were in this kind of, you're in an uptrend, then you went into this kind of triangular consolidation. There was some noisy stuff that happened there, and then boom, you're down, and you're down pretty big. So you're back towards, you're not at, but you're back towards the lows that were registered. I think that was last summer in the fall when the stock market lows got put in somewhere in October. So you're not near them at the moment, like in terms of you're not on the doorstep. You might not even be in the neighborhood, but you're not that far away as you were here. So I don't see that firing is the bottom line, right? So let's just be objective about it. Is there something maybe better developing? Yeah, I mean, maybe there's a higher low. We won't know for a while, but you're still even stuck in this intermediate trend downtrend. The 15 there in red could be your resistance line right now, clearly, right? And probably beyond that, the 20. So it's just, it's not a good look. You look at that, I don't think you can get excited at this very moment that, hey, that looks wonderful. Another thing we may as well throw in, since we've covered so many, but is XBI, right? We looked at this before. We were fortunate to kind of bring it up at the right time. It did something, but this one had another one with kind of a negative divergence, right? We look at this high. By the time you were done making that high, you had a far lower RSI reading that time around than you did this time here. And I'll try to blow these up. And you did here, then you did here. And so that's concerning. Certainly this high is even lower than this high in terms of RSI. So that's concerning, but note, right, that it did hold on to the heavier duty LT SMAs. So you've got the 100 in dash white, purple 200, and you've got that orangey brown is the 150. So at least it's above there. I think if you start to fall below there, you've only got the 50, right? So that could be having trouble. I don't know what's going on there. I have seen more paper in the UOA kind of come into some bio names. But that's, to me, I've been taking that more as kind of like the market's getting a little, when markets get this way, where I think they're getting a little giddy, maybe a little toasty, that you do see the influx of some more speculative stuff at times like that, which this could fall into that category to some degree. So we did look at LQD, I think last week. we were looking at how they were treating corporate bonds and then the kind of the high yield bonds as well. And they also were saved on Friday, but and I don't, they may have closed this gap. Let's see if that gap high 105.83, low. I mean, if you want to be a stickler, they didn't close it. If you want to just say, yeah, it got pretty darn close, that's good enough for now, they closed it. But again, all your short-term SMAs are rolling over. They're all downsloping. The LTs, some of them are downsloping. They're kind of at conflict with each other. But I would say if you take all four of the LTs, right, you got two that are neutral. You've got the 200 that's downsloping, the 150 that's upsloping. So it's kind of mixed, but if you got to give the nod to the fact that the 20 days downsloping in that case, and in that case, right, it's still not looking good. So that doesn't look good. So that to me, when you take that, you take the IYR, these things are all at not vulnerable points at this very moment, but they're not far removed from vulnerable points. HYG, we'll take a look at that to kind of round that out. But these are all at vulnerable points in a hurry with just one bad day, where if they take out those recent lows, right, then they're maybe plumbing other lows from further back. And they're below the, again, they're below the SMAs. And most of those are downsloping in this case, and especially the short terms. So, you know, I don't see this really great picture yet. Maybe we're on the verge of that, right? Maybe we're coming into a week or two, or maybe following the Fed, maybe somehow this will turn into something better that's not as narrow. But I really don't want to, I try not to disagree completely with people, because I don't think it's easy to disagree completely with people. There's so many different ways of looking at things, but the people that are trying to argue that this rally is really not narrow, I mean, I think they're cherry picking. I mean, I just got to say that, because this rally to me has been very concentrated. We've seen other people put stats out on just how historically narrow and rare this whole kind of a thing is. So I'm with that camp. I mean, I just don't see, when we look across the board, and that's one reason we do this sector work, even in a tougher market like this, like when you're in a bull market, this sector work is to me is golden, because you can start to see sectors emerge and join the party, and other sectors you could essentially see rotation, right? Where some sectors they seem like they're getting out of, and other sectors they seem like they may be getting into. And if you can catch those early, you can get some really great runs. And that's where this was, we kind of thought about doing a sector specific video, and that would help. But we've been, ever since we started this video, it's been the markets have not been easy. You haven't really been in the sustained bull market without major question marks for very long. So it hasn't been so easy, but I just don't see this wonderful picture that a lot of these folks are painting. I hope that they're right. I just feel like they're getting in a little like the cart before the horse. I feel like a lot of money has flowed into, this is what has me worried too. A lot of money has flowed into a lot of the big name stocks and these indices as a result. Well, I should say index ETFs, but things related to that. And I feel like if the Fed does not pause, and you sooner rather than later, and it doesn't look like they will if you watch macro measure, as of right now, the markets do not seem to think they're pausing here in June, and they don't seem to think that rates suddenly start going down in July. In fact, it's more likely that we go up somewhere between 0.25 to 0.50 basis points between now and the July meeting. So don't know how that plays out, if it's, if that's true or not, of course, but that's where the market's pricing it. And I may as well just flash that, even though it's more of a macro measure thing. But this is the July probabilities as of right now. And you can see that these two together are nearly a 3/4 chance, whereas staying where we are now, remaining where we are now, is only a 25% chance, roughly speaking. Now, of course, these things change, but that's the latest we've got to work with there. And to me, that I don't see how going up another quarter, then another quarter, which it looks like we could for sure, how that factors into the Fed pause that these people have priced in, it seems like at the very least, aside from an emergency rate cut, it seems to me that we're going to at least be a 0.25 basis points higher between now and the September meeting, which is a little bit off. Like you've got I think the September meeting is, yeah, it's kind of like towards the late part of September. So you could be stuck here as of right now. You could be stuck here for about, well, not quite, I guess, but somewhere in the order of, you could be stuck after that Fed meeting coming up now. You could be stuck there for 3 months, so a quarter, in other words. So that's again, I don't think that's any small thing. And so that's where I'm going to end up this week on things. I just don't see all the happy talk justification. I'm not telling anyone to fight it. You know me. On the contrary, I'm telling people to go with it, other than the fact that we're overbought, dramatically overbought in the semis, and dramatically overbought in specific names in the semis. And of course, the Qs are also significantly overbought already on the short-term timeframes that I keep track of. In fact, you even have in the semis right now on the daily alone, you're at what, 78. I mean, that's very high reading for RSI. That's one reason I used it, because you don't really get to these extremes all that often. You don't see a lot of 78 readings in sectors that often, or in major index ETFs that often, but you have one now on your daily chart. And even like the weekly, I think, is already in overbought territory there. The Qs are already at, let's see where they are on the daily. They're at 75 on the daily. So this is pretty overbought right now. So getting back to the whole sector discussion, this is why, and I think you all know where this is concentrated. So getting into this, I think they need to start fanning this thing out a little bit. If any big, especially if a big name is taking a breather, and I don't want to belabor this, but let's say that we can find a big name that's taking a breather. I don't know. Let's see, Visa, maybe. Let's see. And my guess is that's not a bad guess. I probably could have a better guess, but this thing did get walloped. Maybe they start to work this thing back, right? That's a pretty big name these days. So in terms of market cap. So yeah, so maybe that's what I would say that we could pull out of this. Trying to think. Amazon, I think, had a pretty good week, right? So I don't think that's going to be there to help us. Yeah, the daily RSI there is 69 already. Not that it can't go further, but I'm trying to find things that are a little bit weakened in terms of RSI that they might be able to use to continue this markup and continue this next phase. And you're already at 72 right now on Google, right? So that's a tough one. Apple, maybe. Let's see. I don't have these memorized, as you can tell, where we are. And that's another one that could help, right? I think, look, that looks pretty good in terms of if there's more bullishness to come. Not hard to break out to a new high. You're not that far away. You're only $1 and change away. You're above every SMA. Those are stacked and sloped. The fact that the long terms are still uptrending in a positive slope. The shorties are too, and they're all above each other, and the price is above them all. So that could be one of them that really they could go to. I mean, I can't go through them all. That's not what we do in Sector Situation anyway. But I've got to get these newsletters done for everyone, along with Ryan, and we've got to get on that. But yeah, I think that's what I would be looking for if they're going to continue this. Maybe there's some of the froth is skimmed off the top in some of the semis, maybe after Avgo, or even maybe before Avgo announces their EPS. But some of these other names are what they're probably going to have to rotate into to maintain this bullish complexion, this kind of lock that bullish complexion into view. So maybe some sectors will start to bubble up too, right? So that's what you should probably be on guard for, is specific names that aren't overbought already, that are big market cap names, like we just talked about, and then sectors that are starting to get it together, maybe discretionary. Look for names that maybe are on the verge of shooting up, that didn't really have this wonderful Friday. maybe that they get pulled into that. Maybe you kind of get a bounce trade out of some staples because they got walloped pretty good. Maybe right, if XTN fires, it could have a breakout and move up to the next couple levels. Maybe some transports will go. So maybe, maybe, but those are some of the things I would try to look for. If you don't see them really allowing this market to correct all that much, and then it starts to appear as if it's going to attempt to put another run together. Those are some of the things that I would share at this point in time. But overall, the conclusion really is, right, until we see this broaden out a little bit more, I'm going to still probably be in the skeptical camp, like not trading it that way. I'm just saying big picture. I'm not going to forget about the risk. I don't think there's a lot of confirmation out of the stuff that we look at that's telling us that, yeah, the market's these indices are justified in going bonkers because on an economic basis, things are really about to start roaring in this economy. I don't see that. I hope that it materializes. But if the market's if the market's got this foresight that people say that it does, then where's everything else? Well, why isn't everything else having the time of its life, or starting to at least? Again, maybe it will be this week, but we'll see. On that note, I hope that something I share with you helps you out this week, or maybe another time in the future. I want to thank everyone for tuning in, and I just want to reiterate the sincere thanks from us, myself, Market Rebellion, to our vets, past and present, for the sacrifices they made on this Memorial Day in 2023. Thank you.